All right, hello and welcome to today's webinar with American Banker and Wren, White Label Donor Advised Funds, Are They Right for Your Organization? My name is Aaron Moncrief and I'm the Senior Marketing Manager here at Wren, and I'll be supporting Wren's Kevin McGrath with questions at the end of this webinar. Without further ado, please take it away, Kevin.
Thanks, Aaron. And I also wanted to mention, if you do have questions and you're emailing them throughout the presentation, Aaron did promise that he would raise the emergency questions during the presentation, and he'll cut me off and ask the question right then. But we'll try and hold them to the end, and we'll watch our clocks. So yeah, this is a super exciting topic to be talking about, donor advised funds and also white label donor advised funds. Donor advised funds are so popular or become so popular. It's probably every week that we're getting calls from organizations that need a white label donor advised fund. So in this conversation, we're going to try and determine, is it what you actually need? Are there other solutions out there? How do we make this the most successful? Because the reality is donor advised funds are extremely popular. They're extremely powerful. They're flexible. They're simple, but they're not for everybody. So unless your organization, and we're gonna dive into this a little bit more in a little bit, but unless your organization, unless your firm really wants to invest in the program to make it become successful, it may not be the best solution for you. So let's dive in. One of the things that I thought were most important about the donor advised fund conversation here today is, what is a donor advised fund? So how does it work? So again, we can't talk about whether or not a white label solution is the best solution for you if we don't really truly understand what is a donor advised fund, how do clients use them, operationally, what needs to be done, what are some of the program requirements, all of those things need to be determined. And then at the end, I'll throw the questions back at you a little bit and say, is the white label donor advised fund exactly what your organization needs, and or is it exactly what your clients need? So again, here's our objective for today. So we're going to hit on all these topics. The first thing I want to talk about was how big the philanthropic space really is. And in 2021, you guys have maybe seen some of these numbers before, but in 2021, $485 billion was given to charity. In 2021 was no exception. I'll show you here, and it wasn't an anomaly. I'll show you here in just a second. But what I think is most important about this $485 billion is 67% of it, 2/3 of it, came from our clients. You call them clients, we call them donors. So what that says to me is, I don't even have to ask the question, are your clients charitable? That's not a qualifier for us when we're talking with clients about rolling out a white label donor advised fund. You have to assume that they're givers. If 67% of $485 billion came from individuals, again, your clients, donors to organizations that they feel strongly about. So $485 billion was given in 2021. But if I just went back 6 years, back to 2015, every year, and the same would have been true if I would have gone back 7 years, but I had to cut it off somewhere. So if I went back 6 years and looked at the total giving over those years, every year charitable giving was up. Now, if you adjusted this for inflation, it would have a little bit of a different story. But the reality is that donor advised funds, charitable giving, other charitable giving tools, people are using them because they want to benefit charity. Our clients are charitable. So where did this money go, and why does Kevin think this is important to know? Of $485 billion, 27% of it went to religious causes, 14% went to education, and 13% went to human services. Why do I find that important? Well, when I'm engaged with a financial advisor and or their client or their donor, if I just incorporate into my conversation, you're charitable, are you going to benefit organizations like religious causes or educational causes or human services? It allows me to have an educated conversation with the client, and I probably know where they are. If the largest percentages of giving are going to these types of organizations, I like to incorporate that into my conversation. So again, whether I'm talking about donor advised funds or I'm talking about charitable giving as a whole, I know at least where 2/3 of the assets are going, or more than half of the assets are going, I should say, and the types of organizations that they're benefiting from it. So what's a DAF? So up there in black, it says a DAF is maintained by a sponsoring charity. So if there's one thing that you walk away from this conversation or this presentation is the most important piece of this whole puzzle is the sponsoring charity. Every donor advised fund has to have a sponsoring charity. It's how the client gets a charitable deduction. It's how the client avoids capital gains taxes. It's how the client flows money through to the organizations that they want to benefit. So if you're looking at a white label donor advised fund or any donor advised fund, it has to have a sponsoring charity. So this allows, and I hit on a couple of these already, it allows donors to receive an immediate income tax deduction. So if I give $100,000 to my donor advised fund today, I receive a $100,000 charitable deduction in the year 2023. Avoids capital gains taxes on appreciated assets. So if I contributed something that was worth $100,000 and I only paid $80,000 for it, I have $20,000 of capital gains that I'm avoiding. I can advise on the investments. So me as the donor, I can advise on how these investments are how my donor advised fund assets are invested. I can remove it from my taxable estate. I can do this by way of beneficiary designation. I can do this by way of will or trust, but I can list a donor advised fund as the owner of assets once I'm dead and gone. I can make grant recommendations to my favorite charities, the organizations that I want to benefit, and I can appoint future generations to make grant recommendations to charity. This is a huge one. I mean, this is one of the ones that are talked about most is how do we engage our younger generations? How do we engage our heirs in the things that we feel are important in society? So it's a great way to do that, do family philanthropy, and allow future generations or existing heirs to play a part in this process. And they can do that very easily in a donor advised fund. So how does a DAF work? I always think it's best to use boxes and arrows to describe. And when you only have 3 boxes and 3 arrows, I said before, donor advised funds are simple, simple, simple. It's one of the biggest selling features of a donor advised fund is that it is so simple. So a gift is made by a donor or multiple donors to a donor advised fund. Call that the sponsoring charity. They receive a deduction, and then they get to make grants out to the charities they want over time. So down here in my bullets, donor contributes the assets. There's a variety of asset types. I'm going to splash a slide up here in front of you in just a minute. We won't walk through every single one of them, but I'll give you an idea of the flexibility of the DAF and how I can accept a large array of different contributions. I already said this, the donor receives fair market value tax deduction in the year they made the contribution. Somebody has to manage these assets. So you look at all the different programs across the United States. You know, if you're looking at a community foundation, for example, that has a donor advised fund, somebody's managing the assets of that community foundation's donor advised fund. Fidelity Charitable, the largest donor advised fund out there, somebody is managing those assets in that donor advised fund. So there's a financial professional or a firm behind the scenes managing these assets. And the donor recommends charities to or grants to their favorite charities. So why are they so popular? There's a lot more bullets than these, but these are the high level ones that I wanted to put up here. The highest possible income tax charitable deduction. This is no different than if I made a $100,000 gift to the American Red Cross versus making a $100,000 gift to my donor advised fund. The tax benefit is the same. There's low minimums to set it up. So most programs that exist today will allow you to set up a donor advised fund with as little as $5,000. So my wife and I could open a donor advised fund with as little as $5,000. The donor's family name can be on the DAF. This was kind of interesting because you can, so I could call this the McGrath Family Giving Fund or the McGrath Donor Advised Fund, my last name. Or I could call it Save the Trees Fund. And we see many different examples of this, of naming conventions, but a lot of people will put their name on the fund itself. And heirs can be named as successors. I mentioned this before. My wife and I have a donor advised fund. When we're dead and gone, our children will be the grant advisors, and they'll be able to continue our philanthropy. And then our grandchildren or our great grandchildren. So this thing can go on in perpetuity. The donor can transmit values to heirs. Again, I mentioned this before. This is a hot topic around donor advised funds, but it's the ability to involve younger generations in the family's philanthropy and to be able to transmit those values to those family members or those heirs. Annual gifts from a DAF can free up cash for other purposes. I would say in today's economic environment, this couldn't be any more true. So my example is if as inflation continues to rise, many people may be deciding, do I buy milk or gas or eggs, or do I give to charity? Well, if I had a donor advised fund that I funded several years ago, I have a pool of money that I can continue my charitable giving, and I don't have to use those dollars that are precious to my normal everyday spending. So this is a big one, and this is one that we're talking about often, and I read a lot of articles around this. The ability to free up cash, today's cash, but continue your charitable giving. Gain anonymity. So it is possible that I can make a grant for my donor advised fund, and my personal grant would just say Renaissance Charitable Foundation on it. It doesn't have to have my name, doesn't have to have my address, doesn't have to have the name of my fund. I can be anonymous in my giving. There's no legal drafting fees. So if you're on this call and you're an attorney and you're looking for a way to have billable hours, the donor advised fund is probably not the solution. You don't have any legal documents that have to be drafted for a donor advised fund. You make a gift to that sponsoring charity, you name your fund, and you're done. That's about the difficulty of setting up a donor advised fund. And I mentioned before, it can be perpetual. So this thing could go on forever. It could be limited to a term of years. So I could set up my donor advised fund and say, I want it to last 10 years. So distribute 10% of the value every year. And in the 10th year, distribute all the funds to X charities. So again, I could limit that period. And I could also limit it to my life. So I could say during my lifetime, I'm going to make grants out to the charities that I want. And then at my death, I would like a distribution to these 5 charities equally, or this one charity 100%. So again, I make all those decisions as the donor.
Kevin, one question that popped up for you on this. Are donors able to limit what causes future grant advisors can give to?
They can. So I could say it has to go to like religious causes. I could really limit the types of organizations that my future grant advisors can grant to. Yep.
And another one is, what are your thoughts of naming a CRT as a beneficiary of a DAF?
Oh, well, if you go down 1, 2, 3, 4, 5, 6 bullets, it's one of my favorite things to talk about. So let me hold off, Aaron, and I'll mention it here in just a second. Anything else?
Is there a way to get before a DAF holder or the institution in which their funds are held? I don't know if I understand that one.
So it might be, we get this question often, it might be that maybe their client or they themselves, the person asked that question, has a donor advised fund, and can you move the donor advised fund from one program to another? Maybe that's the question, and the answer is yes. So let's hold off on that one and then see if we can't figure it out later, if I didn't answer it.
Perfect.
Yeah, let me run through this list here. I've already mentioned the top one, include my family. It's a flexible endowment. If you know what an endowment is, typically you establish an endowment for a specific purpose or a specific cause or a specific entity. I could set this up to make distributions annually or monthly or semi-annually or quarterly to one organization, and in 5 years change my mind, and then allow grants to be consistently sent, repetitively, I guess, to the organizations that I want to benefit. So you can create this flexible endowment. I can do challenge grants. So the one I like to use is, let's say that the organization you want to benefit has a building fund. They're building a new building, and you say, hey, we're going to make grants to you of $100,000. We're going to make a first distribution of $25,000 when you break ground. We're going to make another distribution when it's fit, once you erect all the walls, once you put the roof on it, and then when you open the doors. Maybe you could have something like that for a specific cause or a challenge grant. Scholarships are a bit tough. I won't spend a lot of time on this, but the challenge is that a donor advised fund has to make a distribution to a qualified charity. Scholarship recipients are people. So there's ways to do it, but it's not truly a scholarship fund, if you will. One of the things that we talk about often is families wanting to collapse family foundations. And so if you have a family foundation that maybe wasn't funded as much as they thought it would be, or the kids aren't as involved as they thought it would be, or the administrative aspects of a foundation were more than you thought it would be, you can collapse that private foundation, grant all the assets into a donor advised fund, and simplify your life. Weddings, funerals, graduations, these are ways that people can say, we really don't need gifts, but you can make a contribution to this fund if you want. And now I got there, Aaron. Remainder trust, I think it's extremely powerful. So for those of you that aren't familiar with remainder trust or lead trust, let me give you a super high level overview. So my wife and I could fund a charitable remainder trust. We would receive lifetime of income. And then when we die, it would go into a donor advised fund because that's charity. It would go into a donor advised fund that our children would be the grant advisors on. And so not only did I make my contribution, I received income, I got a deduction, I got it out of my estate. I also funded an account that my kids can now be grant advisors once my wife and I are deceased. The lead, I won't go into this one in as much detail, but the lead interest is the exact opposite of the remainder trust. So if you're familiar with lead trust, you could pay that lead interest into a donor advised fund to fund future giving. The bunching strategy is, it feels like it's an old strategy, but really this came about when the standard deduction was raised. And not everybody could use their charitable deductions as itemized deductions on their tax returns, on their 1040. So one way to do that is make a very large contribution this year, create the large enough deduction that you can itemize this year, and then use it to fund your future giving over the next 2, 5, 10 years, and then make another big contribution so you can itemize again. So it's a way that you bunch all your giving, over the next small period of time, a couple years, and get to be able to deduct that on your income taxes. This is a super popular one, the last one, which is funding your charitable retirement. You hear some negative press out there about donor advised funds being parking lots for the wealthy, and that they're not giving money to the charities fast enough. Well, some people use donor advised funds during their earnings years, during when they're making the most money. They'll fund their donor advised fund. And the reason is that when they're retired, they want this big fund so they can continue to do their giving. So they don't have to look at their retirement accounts, their IRA values and their distributions, and worry about whether or not they're going to have enough money to continue their philanthropy. This is one way you could do it. Fund it during life, the donor advised fund, and then you could make your grants out when you're retired. Very common strategy. So I said I wasn't going to spend a ton of time on this. Donor advised funds can accept a number of different types of assets. Some of my favorite stories to share are around complex assets, things that are illiquid. But the reality is that most contributions come from the first 3 bullet points: cash, stock, and mutual funds. Most of them come from securities and cash. Some people might say, well, why cash, Kevin? You would want to avoid the capital gains taxes of securities. Well, maybe something happened, like they sold a property that they couldn't transfer to a donor advised fund, or they had some big income year, and they need a deduction this year. So cash is very common in donor advised funds. But we see closely held businesses. They tend to be much larger account sizes in the multi-millions typically. We have employer stock qualified plans. We have ESOPs, tangible personal property, business farm equipment. I used to say that there's lots of things around the farm that can be contributed. Now I say that if it grows on, lives on, or you reside in, or it helps you farm, it can probably be contributed to a donor advised fund. And it may be an asset that's been depreciated. So it may have even greater tax value to go into a donor advised fund. And then everybody snickers when they see the cryptocurrency, because the cryptocurrency has not been a great market lately. But if you have clients that are holding cryptocurrency from 5-10 years ago, they probably still have significant gains in whatever crypto is that they're holding. So you can contribute that to a donor advised fund as well. All right. Is it right for your organization, though? So now we understand what's a donor advised fund. How does it work? What's the benefits of? Why do clients like them? Now let's talk about whether or not this is a good decision for your organization. So I started with about 15, but I narrowed it down to 3 or 6 questions, that you can ask. It's already a competitive space, and I've got a slide here in a minute to show you some of the competition and some of the players that are in the market. But these 6 questions, I think, will help us determine whether or not a white label donor advised fund is the right thing for you guys. The first one I say is, do you have donor support? Meaning, do you have clients that want to utilize donor advised funds? I would tell you that the answer is yes, for a multitude of reasons. One is, I told you 67% of all giving came from individuals, our clients. There was a recent study that said that 65% of high net worth clients were unhappy with the advice that they received from their advisors around charitable giving. So, do you have donor support? I would suggest that the answer is yes. Do you see money leaving to competitors' DAFs? So whether you're a wirehouse or a bank or an investment management firm or broker dealer, whoever it is that you are or your organization is, do you see money leaving your control or the advisor's control in going somewhere else? That's a possibility, but that's a question I'd be asking. Are financial advisors or wealth advisors, are they asking for a DAF solution? So are they looking for the potential of more control of how to invest the assets? Do they want, let's call it a separately managed account or an advisory account? Do they want to be able to manage these assets in a way that's very specific to their client? Or are their clients asking the financial advisors for a DAF solution, and now the financial advisors or the wealth advisors are asking you for a DAF solution? If the answer is yes there, I think that it's worth continuing on to the next 3 questions. Can you compete in the space? So this one's really important, because how I define compete in this space, and again, it's already a relatively competitive space, is will your organization invest? And that doesn't have to necessarily mean all monetarily invest in it, but are they going to invest in this platform? Are they going to invest in a way that helps it succeed? Are we going to have a great go-to-market strategy? Are we going to put marketing behind this? Are we going to do a lot of education for advisors or wealth advisors? So how are you going to compete in this space, and how much will you invest into this platform is a really important question to ask. Do you have a competitive advantage? So if you're an investment management firm, do you have a competitive advantage over the other players in the market space? Is there something about the mission, vision, and values of your organization that aligns well with charitable giving? What is it about your organization that can compete in this space that will be a successful donor advised fund platform? And then the last one is, I love to ask the question, how do you define the success of the program after a year or 3 years or 5 years? If you came back and said, Kevin, I think at the end of the year 1, we're going to be successful for $50 billion. I don't think that that's a realistic expectation. So how do we define that? How do we really truly define what's a real success after a number of years? Okay. And we're going to look at these a little bit more as well. So now we've kind of asked the questions about what would define our ability to launch a white label donor advised fund, or do we have the market available to white label donor advised funds? So again, I narrowed this down to the 3 or 4 elements that a donor advised fund program needs. The first one I already told you is a sponsoring charity. You gotta have a foundation that can sponsor this thing. You gotta have people in operations that do all of the work activity on the day-to-day basis to keep this thing going. You have to have investment management. So the contributions that are received into the donor advisement program, they have to be invested somewhere. And then the last one is technology. You got to give donors, clients, advisors, you have to give them the ability to go online and see their history of contributions, see their history of grants, make an additional contribution, submit a grant recommendation. You need technology to be able to do all that behind the scenes in the face of the client as well. So here's what I think the 4 elements of a DAF program what it has to be. We probably could have made this 6, we could have made it 5. I've narrowed it down to 4. So let's talk about what the 3 options you might have are. So one would be, yes, we want a donor advised fund. We want it to be white labeled. We want our brand to be on it. We want to be able to choose the investments that are used inside the donor advised fund. You could build that. You could file a 1023 with the IRS. You could establish your own foundation. You could hire the people. You could build the technology. You could put together the investment portfolios that'll be used. You could build the program. So if I went back to this slide of the elements, if I was going to build this, I would have to establish my own foundation. I'd have to hire the people, the knowledgeable people to do all the workflow activity. I'd have to structure the investments that will be used inside the donor advised fund program. And then I'd have to either lease technology or have to build that technology myself. Okay. You could also outsource 100% of the white label ability of the donor advised fund. So if I go back to this, you can use somebody else's sponsoring charity. And I'll use ours as the example. You can use Renaissance Charitable Foundation as the sponsoring charity. The operations and people, instead of hiring them yourselves and training them up to be knowledgeable in the area of philanthropy and donor advised funds and how do you do vetting and due diligence and all that, or you could outsource all of that. The investment management, again, I think that most everybody, I saw a list of the people that register for this, most everybody is in the financial planning space somehow or another. So you probably already got the investment management already taken care of. But if you were completely outsourcing, you could use somebody else's technology and brand it. So again, an outsourced solution would be outsourcing all the aspects of the donor advised fund, including the sponsoring charity, the people, may or may not be the investment management, and also the technology that's used. And the last one, went the wrong way. The last one I had was a hybrid. So again, what I'm walking through is this is the decision that it's like the decision, do you buy it? Do you partner with it? Or do you build it? That's kind of what we're doing here. The hybrid model would be going back to the 4 elements. Maybe you use somebody else's sponsoring foundation. Maybe you have your own internal people that will do some of the workflows. You're going to handle the investment management, but you're going to use somebody else's technology. So again, a hybrid approach to launching a white label donor advised fund. So let me, and I know how small this is, and I think that we already told you that you are going to receive a copy of this presentation or this deck, but let me explain kind of what you're looking at here. And this is the landscape of the donor advised fund space. So this includes sponsors, vendors, recipients, organizations that have the distribution, meaning financial advisors and clients. So if you look at the left side of the diagram, these are all not representation of the entire market, just some examples, but these are organizations that have products or services, financial products or financial services that can include donor advised funds. That middle one is, well, who out there has donor advised funds? We've got universities, we've got healthcare, we've got faith-based. There's a whole bunch of donor advised funds out there that are either very specific to an individual cause or they are broad in scope. The next column, the one that says REN at the top of it, these are all technology or DAF administrators. So these are organizations that might be able to do the administration of a donor advised fund. And again, you're going to receive this deck, so you can go through it. But the middle would be those that have other gift types, maybe like charitable trusts. And then we have support organizations that support the process, like Candid in the middle of that fifth row. A lot of people use Candid to do the vetting and due diligence. So these are support processes. So if I move all the way to the right side of the diagram, I think you guys get the idea. If you were launching your own donor advised fund program, a white label donor advised fund program, or a branded donor advised fund program, so you're going to do it all yourself, there are a lot of players out there that you could go make partnerships with to make this happen. Or you can outsource it all and utilize the organization that you're hiring and or their partners. So on the left side, we've got all the donors, the organizations that have the clients that are donors. And on the far right side, we have all the charitable beneficiaries, which there's about 1.5 million charities that you can make grants to out of a donor advised fund. It has to be a qualified public charity. So again, a lot of decisions to be made here, or you outsource it all. So let's talk about some operational requirements. So we talked about elements. What are the pieces we have to have? Now, what are some of the operational requirements of a private label or a branded donor advised fund program? So this first slide here, I think I've mentioned a couple of times, one of the biggest benefits of donor advised funds is they are so simple to implement. You know, you can do an online application in a few minutes. Basically, it's the names and addresses of all the donors, the names and addresses of all the grant advisors. You know, if you have a charitable interest, you know, what you're going to contribute to this thing. And now you've opened a donor advised fund and all you have to do is fund it now. Very simple. So one thing that we like to say is you got to remove the friction from philanthropy. So DAFs are in a complicated philanthropic space, but they're not a complicated tool. So we need to make sure we're removing the friction from the donor advised funds. So I say we're going to talk about operational requirements. So when I was talking with some of our ops team, I was asking them, what are the activities that are done daily in a donor advised fund program? We determined that there was more than 60 combined individual services. So more than 60 work activities that are involved in the administration of a donor advised fund program. And then we broke it down into 6 different categories. Those 60 bullets that we came up with, which is the next slide you'll see in a minute. We narrowed that down to 6 different categories. One was new accounts, so account opening. One was contributions, which would be moving the assets into the donor advised fund that the client wants to or the donor wants to transfer. You have the program support, the phones, the emails, the vetting, the due diligence, processing, sending out donor statements. You know, it's all the requirements that are necessary to operate this thing day to day. Grants, and this is for the entire life cycle. Do you have technology or forms that can be used to submit a grant recommendation? Then do you have the operational needs around vetting and due diligence, you know, in the processing of grants? Can you cut grant checks that are branded to the name of the donor advised fund? Could it include, you know, special handling instructions that the client asked for, the donor asked for? Disbursements, all other disbursements that would come from the donor advised fund program, cutting checks. Then the investments, you guys get that piece. You know, where are these dollars going? How are they being invested? And how are they divested when we're making grants? So again, this is 60 or more individual operational services that we came up with, broken down into these 6 categories. And again, I won't go through all 60 bullets. It's approximately 60 bullets. And I touched on most of these through my commentary there's just a second ago. But again, the operational requirements around new accounts, they have to have platform access. For those people that are just adamantly opposed to using computers, you have to have a paper application. You have to have application validation. You have to be able to match application to donor. So the whole opening the account process is a requirement. The contribution processing is a requirement. A lot of movement in the contribution processing. Are they moving assets that are already under the control of your firm or your advisor? Are these outside assets? How do we move them from outside accounts into this donor advised fund? So those are all things that you have to be thinking through. Once the contribution's made, who's issuing the tax receipts? If there's any legal reviews that have to be done on the contribution, you know, who's doing those? Again, all the operational requirements around contributions. Grants, we've hit on a lot of these. Who's going to do the vetting? You know, who's going to validate that this is a qualified public charity? Who's going to do the due diligence? And here's how I differentiate the due diligence. I can make a grant to my alma mater, Purdue University. I can make a grant to Purdue University out of my donor advised fund, and that's all fine and good. What I can't do is I can't make a grant to Purdue University for the benefit of my son's tuition. That would be a disqualifying event. So vetting was, is it qualified? due diligence was, is it for a qualified purpose? Okay, who's doing that? Somebody needs to do it. OFAC checks, payment processing, all that needs to be done by someone in a white label DAF program. The investments, you guys understand all this. If there's pools, and everybody's contributions are being contributed to pools, who's doing the unitization, who's striking a NAV, is there any general ledger integration with the sponsoring charity? So all the investment related stuff needs to be handled as well. And then disbursements. We've named most of these, but who's going to follow up on stale checks? Who's going to void and reprocess those checks? How often are you going to process grants? All that needs to be determined in the disbursement. And then program support. I think these are probably already been determined by you what need to be done. Who's answering phone calls? Who's helping the advisor? Who's answering questions for the donors? Do you have emails set up for those groups that are supporting it? Training and support for those back office people, and also front office people and/or financial advisors. The audit support. Who's running the commissions, or who's calculating the files that will divest the commissions from the investment portfolios. So again, all of these things need to happen in a donor advised fund. So not to make it look scary, but this workflow is only 2 bullet points on the previous slide. So every single one of these operational requirements has a lot of work that needs to be done. What this is a workflow of is a donor recommending a grant to an organization and all of the checks and balances that happen before that check is sent out to the organization that they recommended. So again, this is one workflow, 2 bullet points out of the prior slide that had 60 bullet points. Each of the workflows would look something like this. So if you answered yes to these questions before, I kind of answered a couple of them for you. I couldn't help myself, but if you answered yes to these questions before, I think that it is time that you should consider a white label donor advised fund. So the first one, do you have donor support? Again, one idea is, if you don't know, survey clients. If we had a more tax efficient, easy way for you to give to charity, would that be of interest to you? Ask your clients. Are financial advisors, wealth advisors asking for a DAF solution? It is very rare that I talk to a firm, a bank, a wirehouse, again, an investment management firm that sells their products through broker dealers, maybe, whoever it is in the financial space. It's very rare that we have a conversation that advisors aren't asking for a donor advised fund solution. And typically they're asking for a donor advised fund solution where they get to use the custodian that they're accustomed to using. And they want to use a donor advised fund that utilize the investment products that they're used to using. And they want to use, you get what I'm saying? They're asking for a comfortable solution, and a white label donor advised fund could do that. Do you see money leaving to other competitors or competitors' DAFs? So again, if you're a broker dealer and it's going from one broker dealer to another broker dealer, if you're an investment management firm and you're seeing your products be sold in a tax free way, it might be a donor advised fund. And the other thing I'd ask you is, do you have the ability to track monies that leave your firm and go to other organizations? Can you quantify it with how much you're losing? I think it might surprise you. Is philanthropy part of your holistic approach to financial planning? This is absolutely probably one of the most talked about topics, is this holistic approach to financial advising or financial planning. So no longer is it a financial advisor is only concentrating on retirement, or only concentrating on college savings, or only concentrating on estate planning. So we're really doing a much more holistic approach. And one of the legs of that stool is no doubt philanthropy or donor advised funds. Can you compete in the DAF space? This one's really important. Early on, we started doing white label donor advised funds or private label donor advised funds. We started doing them in 2005. And we have certainly hired on or brought on clients that really just wanted to check a box. Their advisors were asking for it, clients said they wanted it, so we launched a donor advised fund, and we really didn't invest in it. Didn't invest in a way that would help, the identity be known, that it would be adopted, that people would use it. So again, if your organization is backing this, and it's not just checking a box, I certainly think this is something that you ought to be thinking about. And then the last one, do you have a competitive advantage in this DAF space? So many times we talk to firms and banks and other organizations that we ask them, and do you have a culture of giving internally? Do you have a workplace giving program? Do you guys have a corporate foundation that makes grants out into the community? The answer is always yes. Well, if it's important to the employee, it's probably important to the client. So I say at the bottom there, a white label DAF may be what your clients need. Now I'm going to open it up to questions, Aaron.
Thanks, Kevin. A little bit of clarity on, or just so the audience knows, again, use the chat box, and we'll get to your questions. A little bit of clarity on the one that we had earlier. How would a nonprofit get in front of a DAF or a DAF holder to learn about, so to teach them about different nonprofits that align with their philanthropic efforts?
Well, the first thing I'd say is that do you track, so the organization, the charity, the beneficiary of a donor advised fund gift? One is, I would say, I would highly recommend that you track where those come from. So if you know that the John and Susan Smith have a donor advised fund at Fidelity Charitable, and you're a charitable organization that received a grant from it, follow up with those people. Continue to tell them what it is that you're doing, that to benefit society, and all the great work that you have. I would say that is one of them. I would also say on your website, I would put a small section there, a paragraph or two that says, do you have a donor advised fund and you want to give to our organization that way? And give them instructions of how to make the grants to that organization. But there's a couple of ideas off the top of my head, Aaron.
Can you name a DAF as the beneficiary of an IRA? And then if so, what are the advantages of that?
Huge. So I would say if I was looking at a client's portfolio and we were planning for the estate, I would target those assets that have additional taxes associated with them, like income with respect of a decedent, and an IRA would have that. So when I inherit my IRA from my parents, it'll be more than just ordinary income taxes that I'm paying on that IRA. I'm also going to be paying taxes on income with respect of a decedent, is what it's called. You can avoid those taxes by leaving the IRA beneficiary a donor advised fund. It's one of the most tax efficient ways to fund at death. During a lifetime, it doesn't work well.
Is there a limit on a tax return for a tax refund about how much you can donate into a DAF annually?
There is, yeah. So the rules are they're kind of big, but there's two things that you do. One is how much is the deduction that you get for making the contribution, whether it's directly to a charity or it's into a charitable tool like a donor advised fund. So the first calculation is how much of a deduction do I receive for that gift? The second part of the equation is how much of that deduction can I use on my personal income taxes? And the most you could ever use is 60% of your adjusted gross income. Now, the second part of that question, though, is, well, if I can only use 60% of my adjusted gross income and I have leftover deduction, how many years do I have to use it? And you have 6 filing years to use the deduction that you received from your contribution. I know that was technical in the weeds, but it's a great question.
Another one that just came in is, off the top of your head, what % of donor flows go to separately managed DAF accounts with higher minimums versus a white labeled pooled DAF with lowered minimums?
Ooh, that's a tough one. I would say of the programs that I'm familiar with, so the programs that Ren administers and or Renaissance Charitable Foundation is a sponsoring charity, I would say the majority of the assets, I'm afraid to put a percentage on it. I would say the majority of the assets are in pooled solutions. And secondarily, I would say that it's separately managed. That's a tough one. I'd have to go through and look at all of our clients and see what of them are pooled. In terms of numbers, it's probably 50-50. 50% of our clients are using a separately managed solution versus a pooled solution.
Is the organization able to set their own minimums in a white label DAF?
Yes. So when you white label, the biggest benefit is that you get to make all the decisions. You're choosing where to custody the assets. It's probably where you normally custody assets. You're choosing the investment options inside those pools, those models, those allocations. You're choosing the minimum account opening value. You're choosing the minimum additional contribution. You're choosing what's the minimum grant size. So you get to make all those decisions when you white label donor advised fund.
Can you go into a little bit deeper detail for the level of effort required to establish a white label donor advised fund program?
Well, it's significant if you're going to go out and build it yourself. I mean, you saw that diagram that I threw up that had such small print on it. Reminds me of Family Circus. If you were old enough to remember that, the Family Circus ad that was in the Sunday paper. Or ad, I said, in the cartoons, but it's significant if you're going to go out and build it your own. I mean, if you're going to go out and stand up your own foundation, you're going to hire the people, you're going to train those people to be proficient in donor advised funds. You're going to build the technology or lease or use somebody else's technology. It's a pretty significant lift. On the branded, I can't speak for our competition, but on the white label donor advised funds with Ren, it's a pretty simple process. I mean, we're trying to match what your public look is. So we're using your fonts, your colors, logos, taglines, images. So we're trying to use all of your marketing to look the same in the donor advised fund. We also have a foundation that can be serving as the sponsoring charity. So one end of the spectrum, Aaron, I guess I'll wrap it up by saying one end of the spectrum is it's extremely difficult to stand up a donor advised fund if you're going to go it alone. If you're going to white label it, again, try not to be too salesy here, but it's pretty simple with ours. I can't speak for other competition.
Thanks, Kevin. And thank you for a great presentation. And thanks everybody for joining us today. You should receive a post-event email later on this week or early next week with the recording and the slides and everything that Kevin shared. There were a couple questions we weren't able to get to, so we'll have somebody reach out to you directly to answer them. And thank you, everybody. Have a wonderful rest of your week.